All right, guys, we are back with another massive update as the Ethereum ETF has been approved. We've seen a $900 pump, 30% pump, and within $150 of a new fresh high. But the ETFs are still not released to the public, and this could take many weeks, if not many months. So what happens to the price over this period of time? Do we see a correction? Do we see a pump? Let's have a look at that in today's video, along with Bitcoin and the dump that we've seen over the last few days. Some of those support levels are coming into question. We've also got the strong alts, which are showing some signs of holding out here while the market corrects. And of course, those major meme coins, which have continued to pump. Now, on top of that, we've got heaps to get through with the traditional markets as harsh realities are setting in to investors as interest rates look to rise. Yes, you heard that here first in January, where we looked at interest rates and the possibility of them not getting cut. Pretty straightforward concept. I'll get to that later in today's video. So let's kick it off with ETH after I let you know about our TIA premium sale. Link in the top of the video description. This ends tomorrow. If you want to jump on board with that, learn how to implement all of the trading strategies we use here for your own trading and investing, link in the top of the video description. We'll talk more about that later. But now, covering the headline of SEC approving 8 Ethereum ETFs, including BlackRock, Fidelity, Grayscale, Bitwise, VanEck, ARK, Invesco, Galaxy, Franklin Templeton. They're all there, but it could take many months, taking 3+ months historically to get this out to the public. So in the best case scenario, a couple of weeks, but there's plenty of examples of this process taking 3+ months. So I want to understand what that would look like on the chart should we see a correction on ETH or higher prices. Essentially, we want to look at where those support and resistance levels lie for Ethereum. Now, this is the announcement from the SEC, so it's all above board here. It's all approved. It's not just speculative rumors on news headlines or on X or anything like that. So we've got this now, but it's not available for the public just yet. So what does the sentiment look like on Google Trends? Well, we've got Ethereum, Eth Etf. This is just the terms that people are searching for. You've obviously seen a big pump up in both of these terms now. Ethereum going from 32 up to 94 for the reading of the last 12 months. But if we take a look over 5 years, we're still nowhere near any of those high prices that Ethereum was at back when it peaked in May of 2021 in the last bull market. You also had the first peak around January, and then the bear market collapses of June 22. We can get those numbers there, and then also November when FTX collapsed. So this is the FTX collapse here, November, even lower. So we're above the FTX collapse, but still well below any of the bear market search terms, and also the bull market time in 2021. So to me, I still see this as a pretty reasonable opportunity for accumulation. The prices aren't the best, sitting at 3,700 or 3,800 for ETH. But in terms of where we are in the overall cycle, should this continue, then there's still a likely chance that we've got more interest to come into the market. How much of a return that is, obviously anyone's guess. I can't sit here and tell you you're going to get a 2x or a 5x. I know everyone wants that. I definitely want a guarantee, but no one can give us a guarantee. There's no guarantees in this game. So onto Ethereum, and the move over the last few days has been $900 to the peak, nearly 30%, short of $150 from that previous top in March. Now, what I think is the most important areas for ETH over the coming weeks, as we saw with how this process could unfold within a couple of weeks, but there's plenty of examples of this process taking 3+ months. If we were to see price drop from here and just basically buy the rumor, sell the news type of an event, everyone getting hyped up that the Eth ETF is getting released. I got to get those letters correct. Then if this is the case, then we start to see a sell-off on price. Firstly, this is a good level, 34.50. That's the 50% level of the range down to the low on the 1st of May. However, going any lower than that is still not the end of the world, probably coming down to roughly 3,200 points. The reason being is that was previous support, resistance, resistance, resistance. So a nice fake out there, resistance, another resistance before the pump. So this seems to be the area that investors were accumulating ETH, putting in higher lows, sitting on 50% supports, and that seems to be a stronghold for the price. So if you were to see this fall underneath into this time frame here, going forward 3 weeks, and then into 3 months from today's date, as we were looking at this on the Eth Etf announcement, so 3+ months, if this is how long it takes until it's released to the market, and then everyone can start to gamble on their Eth ETFs, 3 months would take us out to August of 2024. So let's extend this box out here. Essentially, this would be the no-go zone. It's not the end of the world because you still got the 50% there, but it's probably going to be a little weaker on the rally. What we do want to see, or at least people who are already holding Ethereum, or if you want to get into ETH, is for 3,200 to become the next level of support at a higher low. So that's the key levels here for ETH over the coming 3 weeks to 3 months. Should it be able to pump from here and close above that current top there at 4,100, again, that's going to be even more bullish, but you don't want to see it drop back below these levels because that could take, that would then cause more time for consolidation before it could pump again. The most bullish scenario is a close above 41. Anywhere in this zone between 32 and 41, not the end of the world. Underneath that level between 28 and 32, not the greatest. It just means it's weaker and going to take more time to pump from that level. And underneath the level of 2,800, game over for Ethereum. I'll call it a game over at this point. So the other thing we can see with ETH is the ETH versus BTC chart. Now this move up from the last few days, 20th there to the top, is slightly less than the pump we saw in January when the hype was there for the Bitcoin ETF. So at the moment, for the same week move, or weekly move, it's weaker than it was before. And this is on Ethereum's ETF. So this doesn't give me a lot of hope at the moment, just looking at this purely on the chart, because it's a smaller move than what happened back when Bitcoin's ETF hype was all the rage, right? So from here, the bulls really need to see this thing push higher and get back above those tops. So that's the resistance level there at 0.06, so 6 million Satoshis. If this is to fade out, and we talked about this the other day when we saw this massively abnormal bar, we had another push higher, a reversal here, the announcement day, and we got to close back into that zone. It just sort of starts to paint the picture that the hype of the move might be over for now. It doesn't mean it's the worst case. It doesn't mean it's the end of the world because you still have support down here. And of course, everyone should know by now, higher lows means it's stronger. So if we do get that fade out, you definitely want to see it stay above 0.052, at least 0.052, worst case 0.045. So that's at this low here. So that move has basically been for the week weaker than the previous one. From the low itself, from the swing low, it's almost dead on the same thing. 27.6, 27.7, and 0.013, 0.012. Final recap on that, a close above 0.06, going to be very strong for ETH, and that would almost confirm that that low is in. For now, this is just another bounce like the last bounce because it's at the same measure, the same thing here for ETH. That takes us over to Bitcoin and the dump here. As we get into those harsh realities for the market and what's setting in there, you can definitely see it come across in the stock markets as they've also corrected overnight. For BTC, it's had a correction again at that 72K level. We had the fake out up there. I've got our level here at 71. There was only 1 day close above it. It's pulled back. So we've had a red day, but essentially 2 down days so far. Those days are up for us because they're high highs, high lows, even though it was red. Moving on though, the move to the 50% level. Guys, this is why you must know about the 50% level. It's so important, especially for short-term, long-term trading. You can easily start to identify where these support and resistance levels are going to come in. And that number was at 66 grand. You can see yesterday it dropped to 66,200 and bounced from that level. So the close isn't the worst. You got to close above this previous area of resistance. So that's a good thing, at least on the daily. But when you go to the weekly chart, we still have a few days to go. So it's not the end of the world here. But if this was to continue and close where it is now or slightly lower, then you've got another reversal bar at a lower top to the previous reversal and another lower top to the current all-time high, which is the top of that move. So that could then spell more time under the all-time high and not this sort of major pump up to the upside. We need to see what happens over the course of Friday. Obviously, there's still one more day left in the trading week and then 3 more days left for the 24-hour markets. So that's going to be important leading into Monday, or obviously Sunday night's close. So keep an eye on that. That's going to be the big levels that we're watching for the weekly chart. But if you have been following, then it shouldn't come as any surprise that this time in the market was essentially a time to cool off. You know, we talked about this in February on this massive bar here. We talked about it in March, that things were just getting way overheated and they needed to have a pullback. Going through all of this data as I did in previous videos, so just as a recap here, it seemed like we did need some time off, and it was likely going to be obviously at least 1 month, probably 2 months. You can see here monthly swing bottoms as well. That's typically what we have seen into pullbacks after monthly swing tops. How long have they lasted, and when did those swing bottoms occur? When did the pullbacks end? And we've seen 4 times in June, 0 times in May, but maybe we see this June just being a bit of an inside month, higher lows and lower highs, and then we start to power on for the next stage of the year, which typically I think lines up with a lot of things that are happening in the traditional markets as well, as I'll get to in a moment. So essentially, this was still that cool off time, and on the shorter term timeframes, if this remains here or under sort of $69,000, $68,000, then well, it's sort of leaning towards that we just need a bit more time to consolidate to then move to higher prices. Just on that weekly chart as well, as I've got here, we're at their 10th week under the old all-time high. This was 15 weeks underneath that significant top, so it took some time to recover, but at the end of the day, it still pushed higher. So I'm still in the macro bullish camp. If it takes a little more time, it's going to be the same as what's already occurred, and hopefully that gives it some more power to push on to much, much higher prices. Onto the social risk, and Ben Cowan's got his lovely social risk metric here. So I like to look at this stuff to give us an idea of the numbers of people in the game. And essentially this is, if I move this here, it's pretty much showing that we're at the lowest levels that we've seen in a very, very, very long time. What I think is most people are waiting for higher prices again to come back in. So when this occurs, it's a pretty good sign that you're at some sort of low. You can see it here in January, lows there, more lows. Of course, COVID happened, higher low bottom form, which is another very bullish sign. So that's a good thing there. And then more lows before the market basically took off from that point. So the beauty about that is it's probably sitting somewhere around a low. Prices are getting higher. So you're starting to see a divergence between the price and the retail, which means I think over the coming months, we'll likely see higher prices. It also shows up here on the Google Trends. Bitcoin has started to climb higher. Crypto started to climb higher, only just. And you can see it happened back in 2020 where you had this sort of bump up in July, August, fade out, and then you started to go on this mega run. So we get something like that. That could take another couple of months. Maybe we see a move higher for the Google search term, fade out again over the course of summer, and then start to push higher towards the end of the year with the elections coming up as well. Now, my brother Michael did something on his channel looking at likes versus dislikes, just as an understanding of where we are in the current cycle, which flows on with this particular reading here for the social metric, just to see whether we're around some sort of low or have seen a low. And the idea, I'm not sure if you can see it here, but essentially looking at the likes versus dislike ratios, which is a good reminder to smash up the like button, subscribe to the channel if you're this far into the video. We're seeing 99% likes, which is typical of around a low area. It doesn't have to be the low, but around the low, because you're not getting any fresh blood. And I'm not ticking off too many people unless there is the word death of crypto in the title, where a few people get a little bit triggered. So be it. But essentially, it's all 99%, which means you guys that have followed along the entire time are still here and you understand the content itself and what we're talking about. Whereas when the content starts to reach a new audience, they don't really understand what we've been doing for the last several months or even years, and they get a little bit triggered at different ideas coming to them, because typically they're used to hearing the same thing from the same major channels. And when you tell them, oh, look, maybe we're starting to see a top, and everyone else is telling them it's still a bull market, they get triggered and they hit the dislike button. So I think it's a pretty good metric to understand where we are in the cycle. You start to see dislikes go under 98%. So basically 2+% of dislikes, then we're getting somewhere around the top. Onto the altcoins, and after this pump from ETH and BTC, where does it leave us with alts and the strong alts? Solana is still tracking around the 50% level. Ideally, this is still a strong position for Solana to be in at this stage of the cycle. Higher lows have formed. Sol versus BTC, remember, I'll have a look at the USD chart as well for those folks. But anyway, this was the higher low area that I've been following now since April. I posted about it, so make sure you follow on X as well so you can get those updates. And essentially, it was just looking at altcoins, the strong altcoins, making higher lows against Bitcoin at that point in April. Note that Bitcoin went lower on the 1st of May. So Bitcoin put in a lower low while altcoins made a higher low against BTC. So there's some strength there, which might suggest that we're going to go into an altcoin, that there potentially will be an altcoin season if you're seeing higher lows on alts at this stage of the cycle of Bitcoin getting that slightly lower low. I'm not going to get too excited just yet because we haven't seen anything break out, but that's a good early sign should those lows remain in. So that's why I'm still quite bullish on this next stage of the cycle, or one reason. So above these 50% levels, still a good sign. That's this line here. You can see it for yourself on the chart, still in a strong position. If it starts to break down and fall below these levels, that would just mean that, well, it could potentially be forming into a weaker cryptocurrency. It's as simple as that. That's how I like to make my trading. I hope you've got something as simple as that in your own portfolio so you can make quick decisions when you're implementing your own trading. If shit takes a long time for you and you got to go and check 5 different channels, 10 different X accounts, you're still unsure when to buy and when to sell, that is going to be very, very painful when the market is in super drive, in hyperdrive like it was in December, November of last year, and then into that peak in March as well. It's so hard to make decisions if you need to go and check 20 million different things. Keep it really, really simple, and life becomes far more simple. Now, that's a shameless plug to TIA Premium. The sale is on now, ends tomorrow. Link in the top of the video description to get the coupon code, the discount code there. So make sure you subscribe to that, and those emails will go out to you so you get that discount code. So that is Solana against Bitcoin, Solana against USD. It's holding up pretty damn well. We can see the low here, and the 50% back down at $154. So still in a relatively strong position here. Pendle still in a relatively strong position, above 50% there at $6.30. And if you look at it against its BTC value, also above the 50% and above the 50% of that particular move. I'm not suggesting that it goes straight up. It could take some time here, pause, come back down and above. The main thing is it's still above this major 50%, which potentially leads it in to be a stronger altcoin come the next stage. If this breaks down, weaker altcoin. That's simple. Super, super simple. Render, it's starting to break down here, not back into this zone yet, and the zone between the low, the higher low, and these tops, about 10,000 Satoshis up to about 14,000 Satoshis. So it's not looking as strong as the others, but still pretty decent on the chart at the moment. And against the US dollar pairing, just holding out here at $10. So still holding up relatively well. As for the meme coins, well, that's pretty self-explanatory. You've seen higher lows, and although it is up, it's still a strong altcoin to have a look at. This is exactly what we were talking about with our members earlier this month when it started to put in higher lows. It tested those tops and then took off from there. So great trading opportunities when you find strength in a market. I know a lot of people still want to buy up these dips, but what happens is you just keep buying the dip and it keeps going lower and lower. And then sometimes it pushes up and you think you're a winner, but your average price is still above where the market had pushed to. That's the failure of a lot of people that get into crypto. So try to avoid that. Personally, I like the strength and it continues to pay dividends. So the harsh realities for the traditional markets, moving quickly on from the altcoins, is that interest rates may increase and not get cut. We're seeing it again. It's starting to shift into this increase into the next meeting. Now, of course, it's 99% chance that it remains at 5.5%, but at the beginning of the year, we did not even see any possibilities of interest rates increasing. And now we're starting to see it more and more regularly. Look at this side. This is the increase to 5.75%. This is where we currently are at 5.5%. Next meeting seems almost guaranteed it's going to remain on pause. The meeting after that, almost guaranteed that it remains on pause. Then you go to the meeting after that in September. It's sort of a flip a coin between a cut and a pause, but we never had this so regularly like we are having now, and we didn't see it at the beginning of the year. So to me, I think these are potentially going to again continue to shift to the right, and interest rates remain on pause, and eventually the market will figure out that interest rates are going to remain on pause and that things are going to be okay for the next period of time into this final peak before stuff gets serious. So the market, I think, is adjusting. We've seen a correction now on the S&P 500, so pretty significant pullback here to 5,300 points. Still, not the end of the world. You can put your 50% in play. You could come back and test 51.66, and we're still within the strong half of the 50% tool here. So again, a correction, pretty significant volume. Let's wait and see what happens with this market. The same deal for the NASDAQ. Again, another correction here, low to high. We're looking at 18,060 for a potential correction point there for a support in the strong half. On top of that, we saw the US dollar push up last night. So just push back above 105 and get almost a close above 105. It's currently sitting above 105 at the moment. So it might be putting a little bit more pressure onto those asset prices. Now, with that in mind, we have been following the seasonality of the year, and we can see through April through to June, that there are periods where you do get corrections. We have seen relatively strong push out of April into this new top in May, but it doesn't seem like the market is doing anything too different to what it's done in previous election years. This one here takes us up to date a little more. So thanks to Almanac Trader, we can see that we've had a pullback into this low, and then the move up into May got us to a new all-time high. And then this slight correction over the last day brings it back down. The green line, you can see, has been basically a correction into the end of May and then starts to push higher. Basically, what they're saying from here, this is your quarter one, quarter two, quarter three, and then should have just wrote 4 there. There's 4. Essentially, those last 7 months push higher on the market. Now, there are corrections, and more corrections. And through those times, the majority will think, oh, it's over this time. It's over this time. Because when you look at how long they last, that whole period of July looks like a correction there. You also get a correction in all election years here in the black line. So for half the month, you also get a correction from September into October just before the election. That's almost 2 months of down. And so all we've seen so far is roughly a month of down and a month of up. So imagine if we started to fall into some sort of 2 months of negative prices on the stock markets, that would feel like it's the end, like this is over, the blow off top came in, and basically the markets are heading down from now on. But you can still see that it put in higher lows and then continued to take off to the end of the year. So I'm still on watch for this. Nothing has really changed when it comes to the seasonality of the stock markets in an election year, which still gives me, I don't want to say hope, but it still shows from the data itself that we're in a macro uptrend, which would still be positive for Bitcoin and cryptocurrencies coming towards the end of 2024 and potentially into 2025 as well. Link in the top of the video description and the pinned comment for TIA Premium. The sale is on until tomorrow. Don't miss out on that. Let's go. 3,500 likes. Thanks again for your support, guys. I'll see you back at the next video. So until then, take care and peace out.